Hi, this is Kevin Van Trump. I'm coming to you live from one of my offices in downtown Kansas City. Trying things a little bit different this year. 2020, we're going to make a little bit more commitment to doing some webinars or some quick little podcasts or video type things to try and help some of those who have really had some questions or at times some timely, real-time type questions and answers. I think as most of you know, I sit on the board at several companies throughout the United States. We have farms in South America, some other investments heavily invested in the ag sector. A lot of times the banks or ag banks or ag lenders will ask me my opinion, my thoughts on current situations from a view of 30,000 feet. You know, what's happening with the economy, what's happening with the trade, and how do we see things playing out. So, you know, I hope this helps everyone, gives them some quick insight, maybe a little something to chew on. Like I said, these are just my opinions, not facts, just my thoughts and opinions through years of experience in the investment world and through my trading background in Chicago at the Board of Trade, the Merc, and here at the Kansas City Board of Trade. So I appreciate everyone. Hope this helps. The big question we've had this week, a lot of readers, a lot of people calling in asking, you know, what's my opinion of the coronavirus and how do I think it's going to play out and will it impact or affect any of our type of investments? Just to let you know, for full disclosure, I did take some positions off earlier in the week. I kind of backpedaled a little bit on the first headlines coming across of the coronavirus and that there was talks that there were some deaths in China. So we backpedaled a little bit just because, man, we banked some great profits and, you know, we've had a really one heck of a run through 2019 and early into 20. Tesla's still our top holdings. As I told people in this morning's report, I, you know, backed off about 50% of that position on yesterday's open and new all-time highs. And I still love the story. Fundamentally, really nothing changed. We just hit a profit objective that we had in place. We're going to sit. It's still one of my top holdings at the current time. We're just going to sit and kind of watch things play out. But on to this coronavirus, you know, the real issue and what I'm hearing right now is as of this morning on our briefings that, and it's Thursday, this is Thursday, January 23rd, just to keep everyone up to date. It's about noonish here, but our briefings earlier this morning was that the Chinese government has quarantined, I believe, about 23 million people in 7 different cities surrounding Wuhan. Wuhan's kind of the epicenter of where we've seen the coronavirus kind of pop up and where they're zeroing in on it. You know, these 7 cities, you know, as far as China is concerned, I mean, it's only 23 million people. You know, it's not you know, China has over 1 billion in population. And you start to wonder, you know, how do we play out moving forward? And I think most on Wall Street and most of my friends that are heavy investors or traders, you know, it's all about consumer spending. And as you see this quarantine and lockdown, from what we've been told, you know, all public transportation in these 7 cities has basically been suspended. And, you know, they've locked even everything down. There's even no ride hailing or car hailing apps. They've shut those down. You can still move by your own privately owned vehicle. But from what I understand, they have like health checkpoints on the highways, similar to like a DUI checkpoint here in the U.S. I mean, I think they have health officials on hand. They're checking people, checking for temperatures, fevers, any signs or symptoms. So it's you know, they've locked down planes, ferries, any types of transportation that are moving people around. So it's a pretty serious lockdown in these 7 cities and a pretty serious quarantine. Now, does it spread or how does it spread? I don't know. But let's talk first. You know, Wuhan's basically pretty centrally located in China. But there's been a lot of people that have made insinuated that there's been a lot more of their centralized highways running through parts of Wuhan and these other 7 cities to try and connect cities in China as we've seen this push to modernization over the last 10 to 15 years. So Beijing, Shanghai, you know, lots of these places have travelers that are coming in and out or through Wuhan. That's kind of the worry is, would they, you know, could they travel to and from, and how's that going to play out moving forward? To this point, there's only been one case talked about here in the U.S. or identified, and I believe that's out in Seattle, Washington, is the only case that to this point that I've heard of. I know Mexico and Russian governments have a couple of people. I'd heard yesterday that they had them on lockdown kind of and watching them being concerned that they may have had some transmission as they were travelers to and from China in those areas. I know it has spread already and moved into Singapore and maybe a couple of other areas. So, that's really the big question is how is this going to impact as it spreads, or will it even spread? There's so many unknowns surrounding this. But the biggie on Wall Street is how's it going to affect consumer spending? And from our perspective, it couldn't happen in China at a worse time. This weekend, China goes in and celebrates their Lunar New Year holiday. Traditionally, all workers are off 7 to 10 days, minimum 7, some extended to a 10-day holiday. And there's mass travel across the country. We've heard the Chinese government has already pulled the 7 major films that were ready to be released over this holiday period, just try and keep people out of the movie theaters and to keep things just simmer down a little bit and to keep them slowed down. So, here in the U.S., what it was about 72% of our economy is based on consumer spending. So we start to ask ourselves, as consumer, if people are quarantined down and locked down, how will it impact consumer spending? At this point, doesn't seem to be like the market's really given it that much thought. As far as facts, like I said, you only have 23 million of the billion plus people in China under some type of quarantine. So I don't believe it's impacting consumer spending massively as of yet. But the question is, how does that play out? And with everyone sitting on big gains from 2019 and 2020 in the stock market and in some of these other areas, will people be a little quick to head for the exits? I'm not certain. There's some talk and theory that some of the bigger funds and bigger money managers may have one finger on the trigger, so to speak, shoot first, ask questions later, and that just means they may be quicker to exit, not waiting for the facts to come out of the reports about first quarter consumer spending or second quarter, or however that dynamic plays out. Just secure what's theirs, build a moat around it, so to speak, and protect their assets. So that's why we took a few steps back earlier in the week. Like I said, we've hit some great numbers, and I just wanted to clear the board just a bit, just catch our breath and see how things play back. If we look back in history, and that's been a lot of the question, what's happened historically, it seems to me that the market, when you get a health scare like this, the market can sometimes have a sharp knee-jerk reaction, but it's mostly short-lived because, the world has gotten most of it under control in a fairly timely fashion. When SARS hit back in, about 18 years ago, we had a reaction, but it was fairly short-lived. Like I said, a knee-jerk to the downside and then fairly short-lived. If you guys remember back to 2014, that's when Ebola hit. It was interesting. We had done a lot of research in our firm, and we had gained fairly good insight, and we're keeping a close eye on Ebola, and the market really wasn't reacting. It wasn't until the patient that had Ebola was flown into Atlanta airport that the market really, it hit close to home. The market really reacted. I believe a few days later, the market was down over 10% on the knee jerk. So, nothing came of it. Obviously, we stabilized and based and went on to make new record-setting highs as we're out into this territory right now. The other one that some people are referencing is the avian flu epidemic. Now, I was actually trading in Chicago at that time. It was in '97, I believe. That coincided, though, at the same time with the Asian financial crisis, and it came just before that big Russian debt default and the collapse of the long-term capital management. So, still, though, after the sharp knee jerk on the avian flu in '97, we managed to rally almost, I think it was somewhere closer to 30%. I think we rallied probably close to 30% in '97, and then posted double-digit gains into '98, '99 before we hit the dot-com bubble. So, I don't know if you can just look at the actual health care crisis or a healthcare type of pandemic when it pops up. It's possibly also the other things surrounding it around the perimeter. Right now we do have some rumblings brewing in the Middle East through Iran. We have the tensions with Iran, a few things happening on that front. The European Union seems to be in good shape right now. Let me rephrase, seems to be in a lot better shape than it was, say, back in 2010, 2009 when we were talking about the EU crisis. So, I don't feel like globally there's a lot of unstable ground. I just think we need to pay close attention. We need to pay close attention and think about consumer spending. China is the number two largest, global economy behind the United States. I believe GM has a manufacturing plant in Wuhan. So we're talking an area of the world where there's activity and there's movement, and they've quarantined down 7 cities that have some connections to Beijing or Shanghai and some other areas. And I think it needs to just be on the radar, and we need to pay close attention. That's why I said, if you feel like you're out over the tips of your skis a little bit, or you may have a little bit too much risk on, probably walk it back, take a few steps back. And that's really where we're at. And like I said, it looks like the U.S. economy is firing on a lot of cylinders. Employment looks strong. We're coming into an election into 2020. There's a ton of wild cards already in the air. We just want to watch and see how nervous the market gets. Maybe the sharp knee jerk is a buying opportunity. I'm not sure. I wouldn't just isolate and view in and hone in your focus just on the pandemic or the health scare. I think you have to think and add some additional moving parts and dominoes to that mix and try and play out and forecast in your mind how you see it playing out with the other circumstances and situations that are brewing at the current time. We've had crude oil has dropped, I don't know, we're down 9-10% in just the last couple of days. So the problems in the Middle East, again, short-lived. The market kind of had a knee jerk. We popped to the upside. All of a sudden, we got gasoline prices coming back down. Crude oil prices are coming back down. And that's going to help stimulate things and help provide a little extra money in the wallet for consumer spending here in the U.S. So, like I said, I think it's something we just need to watch, keep our eye on. I hope this gives you a little bit of better insight as to our thinking and how we're playing it. We certainly haven't hit any panic button as of yet, but we have it on the front of the radar, and we're paying close attention to it, and we'll keep everyone in tune and abreast as we move forward. So thanks a lot. I hope everybody has a great weekend, and go Chiefs. Thanks.